Hi everyone, I welcome you once again to the PT365 economic section discussion for prelims 2026, which is just 4 months away. Now we have in the very first lecture we have completed the banking and monetary policy discussion. Then in the last discussion, which was second part of this entire series of discussion on the PT365 economics, we have discussed finance and the taxation. Now, today we are going to discuss the financial market and payment system and external sector as well. Okay, today we will complete two topics. Okay, the from 19 to 30, and we'll try to also complete a certain aspects of the chapter number 5. Okay, then we will be left with chapter number 6, 7, 8, 9, 10, 11. Okay, so around 70 pages. This document is around 90 pages, out of which 20 pages, around 20 pages discussion we have already done in 2 days. Okay, now let us start the financial market and payment system discussion. Okay, so here is the financial market and payment system. So Indian financial market. Okay, so Indian financial market structure, money versus capital. Let us understand this market structure. So money market. Money market is basically the cash wallet for short-term needs. Okay, so what is the see UPSC has already asked one question on the money, on the difference between money market and the capital market. Okay, so in the future also there can be a question with regard to the difference between money market and the capital market. So let us remember that money market is for the short term needs. Okay, if you want to borrow money for short term needs, then you need to go to money market, whereas capital market is the for long term wealth. Okay, okay, like for example, you want to build a road. Okay, a 5 kilometer road, and for that matter you need to have loan. So that is under capital market. Okay, if you are taking loan for that purpose for a short term duration, suppose for 1 year 2 year, then it is up to 1 year, then it is in the money market. But if you want that loan for suppose 3 or 4 years, then it will be the part of capital market. Okay, so duration is less than 1 year. Now risk, high liquidity, low risk. Regulator, who is the regulator of the money market? So it is the Reserve Bank of India, the Central Bank of India, who regulates the money market. Now let us talk about the capital market. So here risk is high, volatile, and growth potential. Okay, who is the regulator? So Security and Exchange Board of India, which is SEBI. SEBI is the body who regulates the capital market. Okay, now key purpose and players. So money market, you have key purpose, is solve temporary cash crunches for banks, government, big corporates. Here you have capital formation and wealth creation for retail investors, mutual funds, FIIs. Now common instruments, if we have to talk about the common instruments in the of the money market, then they are treasury bills, T bills, which is government short term borrowing. Then you have call money, which is interbank overnight uh, money exchange. Then you have commercial paper, CP, which is for corporate quick funds. And then we have CDs, that is certificate of deposits, bank funds from big investors. Okay, now here we have in capital market we have subtypes and instruments. A for the primary market, new issues, and secondary market, B, that is the stock market. Okay, now IPO, initial public offering, transaction, investor, company, for example Zomato IPO. See IPO, remember IPO, there can be a question on the IPO because last year IPO has been in news for many of the reason, because of the PW was listed in IPO and it got failed. So that was the news. Okay, so can be question, and similarly many other, Zomato was also in the news. Okay, so you remember that. So BSE and NSE, Bombay Stock Exchange and National Stock Exchange. Okay, now here you have shares and you have bonds and debentures. Okay, now let us talk about the regulator of the capital market, which is SEBI, Stock Exchange Security Exchange Board of India. Let us talk about the SEBI. Okay, so why it is in news? Because the SEBI board meeting relaxed key regulations. It has relaxed key regulations and introduced the Swagat FI framework. What is now we have to understand the Swagat FI framework. Okay, so we'll understand here. Okay, so what is this Swagat FI framework? So, SEBI approved the introduction of single window automatic and generalized access for trusted foreign investors, framework for FPIs and foreign venture capital investors. Okay, so it is basically for whom it is introduced for it is introduced for FPIs and foreign venture capital investors. Okay, it is introduced for FPIs and foreign venture capital investors. Okay, so now let us understand. Let us understand about the SEBI. Okay, this is the basically our static part. So this is important because UPSC has the habit of asking questions from the static of the current events. Okay, so SEBI is the this news that SEBI board meeting relaxed key regulations is the current development, but detail about the SEBI is the factual thing. Okay, so we should know about this. So establishment, so it was first set up in 1988, but it became a statutory body only after SEBI Act of 1992. Okay, so it was first set up in 1988, but became a statutory body only after SEBI Act of 1992. What is the objectives? So it has objective of protecting the interest of investors and promoting the development of security markets and regulate its functioning to ensure transparency and fairness. Now, power enforcement and investigation power. So it has also investigation powers along with enforcement power, including powers similar to those of civil code. Okay, it has power similar to civil code under the code of civil procedure. Okay, 1908. Now SEBI is governed by a board of directors. Okay, so it is basically governed by a board of directors, which the constitutes constituent of which is a chairman, which is basically nominated by the Union Government of India. Okay, so chairman is not elected; it is nominated by the Government of India. Then two members are representing the Union Finance Ministry. Okay, so so SEBI one member is the chairman, which is nominated by central government. Then you have two member from the Ministry of Finance. Okay, Ministry of Finance. Then one member is representing the Reserve Bank of India. So one member is also there from the side of Reserve Bank of India, and then again five members are nominated by the Union Government of India, of which at least three are full-time members. Okay, so chairman is also nominated by the Union Government of India. Then five members are also nominated by the Union Government of India, of which at least three should be full members. Okay, so full time members, and one member represents the RBI. And two members represent the Union Ministry of Finance. Now, decision at the SEBI board meeting. So, Swagat FI framework, we understood that SEBI approved the introduction of the single window automatic and generalized access for trusted foreign investors framework. Swagat FI for FPIs and foreign venture capital investors. Okay. While FPIs invest in listed securities, where FPI foreign portfolio investor they invest in the listed companies like equity, bonds, derivatives, etc. On public markets. Foreign venture capital investors invest in venture capital funds. Okay, so FPI invest in listed securities, which are equity, bonds, derivatives, whereas foreign whereas a foreign venture capital investor invest in the venture capital funds. Now, reclassification of real estate investment trust REITs as equity. Reclassification of real estate investment trust REITs as equity, enabling enhanced investment by mutual fund schemes in REITs. REITs allow individuals to invest in large scale income producing real estate. InvITs are similar to REITs, but they invest in infrastructure assets like roads, power, transmission lines, etc. Okay, so this is important. InvITs are similar to REITs, but they invest. So InvITs are invested in the infrastructure sector such as roads, power, transmission lines, etc. So InvITs. Okay, so remember this. So now relax initial. So sorry, one second, just a second. Now there is a something called relax initial. There is a something called initial public offering. Now let us understand this. Okay, so relax IPO norms for large issuers and extended timelines meet the minimum public shareholding for issuers. IPO refers to now what is IPO? So we have to understand that. Okay, now what is IPO? Let us understand. So IPO basically refers to a company IPO refers to when a company first sells its shares to the public and is prerequisite for a listing on a stock exchange. Okay, initial public offering refers to when a company first sells its share to the public and is prerequisite for listing on a stock exchange. IPO transform a privately held company into a public company and is the largest source of funds with long or indefinite maturity for the company. Now there are other key terms associated with the SAB. Let us understand that. Now AIF. So there was a question on AIF in 2025 prelims. So let us understand what is AIFs. So alternative investment funds, any which is any fund incorporated in India, which is a privately pooled investment vehicle. Privately pooled investment vehicle which collects funds from sophisticated investors, whether Indian or foreigner, for investing in accordance with a defined investment policy for the benefit of its investors. Okay, so let us look at again the definition so that we can understand very well. Okay, so alternative investment funds, what is this? So any fund incorporated in India, okay, any fund incorporated in India which is privately owned. Okay, so it is a privately pooled investment vehicle. Okay, so any fund incorporated in India which is a privately pooled investment vehicle which collects funds from sophisticated investors, whether Indian or foreign, for investing in accordance with the defined investment policy for the benefit of its investors, for the benefit of its investor. So what is alternative investment funds? So AIF, what is alternative investment fund? So any fund incorporated in India which is privately uh, which is what which is privately pooled investment vehicle, which is a privately pooled investment vehicle which collects funds from sophisticated investors, whether Indian or foreign, for investing it in accordance with a defined investment policy for the benefit of its investors. Okay, so alternative investment funds is a kind of fund which is primarily pooled from various sophisticated, investors, whether Indian or foreign. So both Indian or foreigner investors can be part of alternative investment fund. It is privately pooled. Okay, for investing in accordance with a defined investment. Okay, with a defined investment policy for the benefit of its investor. So that is all. So now alternative investment funds, AIFs are regulated by SEBI. It is regulated by SEBI as per SEBI Alternative Investment Fund Regulation 2022. Okay, so alternative investment funds are regulated by SEBI. Who regulates the alternative investment fund? So SEBI regulates the alternative investment fund. Okay, also RBI has exempted SWAMIP special window for affordable and mid-income housing fund, a government backing fund for fund from its tightened rules of AIF. The RBI prescribes the regulatory guidelines in respect of investment by the regulated entities in AIF. Categories of AIF. Categories 1. Oh, so see, there are certain categories of AIF. So let us understand. So first is the category 1 AIF. Invest in startups, early stage ventures, or sectors considered socially, economically, sectors considered socially or economically beneficial. For example, venture capital funds, angel funds, SMEs funds, infrastructure funds. Okay, these are examples. So there are various types of AIFs. Okay, alternative investment funds. First is the category 1 AIF. It includes investment in startups. Okay, if you are investing in startups, okay, and then early age ventures, okay, and sectors that considered socially economically beneficial, for example, venture capital funds, angel funds, SME funds, and infrastructure funds. Okay, so these comes under category 1. Okay, now there is something called category B. Category second, AIF, alternative investment fund. What is this? So they do not use, so they do not use leverage or debts other than to cover their day-to-day operational expenses. Okay, they do not use they do not use leverage or debts other than to cover their day-to-day operational expenses. For example, private equity funds, debt funds, real estate funds. Okay, so these are under category 2. Okay, private equity funds, debt funds, real estate funds. Now category there is a category 3, alternative investment funds. Now what is this? So it may use leverage including through investment in listed or unlisted derivative. It may use leverage including through investment in listed or unlisted derivatives. For example, hedge funds, private investment in public equity. Okay, so these are three types. I think first is the most important. Okay, so please remember. Okay, let me show you the question that has been asked on this in 2024. Okay, just a minute.